Hello YouTube and welcome to another video. Today we're going to be talking about the crypto winter, which appears like it is underway. And I'm saying that because, oh my goodness, are we making some substantial cuts? We're now down by 12% today. And Jim Cramer is calling this Crypto Monday, like we had Black Monday. That's what he's calling it. So we're going to go through some charts today. What I notably want to point out here is just that we kind of lost an area where dip buyers always showed up, were always excited, and now they are not. So we've talked about this before, and again, what we have here is going to be a yellow box, which is going to show the area that I want to point out. And pretty much every time that we fell below 30K, again, we fell below 30K in 2021, 1, 2, 3 times, 4, 5, 6, 7, 8, 9. And by the 9th time, everyone who wanted to buy got a chance to buy it here, here, and now it's flushing. This is also quite terrible because we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 out of the last 12 bars are red. That is pretty bleak. And the reason for that is because we note that there's been Celsius. Celsius is another hit to the crypto's future. So Bitcoin finally breaks. There were some other issues happening at Binance. There was one order that was really locked up, causing trades not to go through. But then we also had Celsius. So this is really starting to compound. We can also note that, where's my other one here? Noting that the value for all of crypto is now below the, let me actually pull it up here because I want to make sure we actually see it. So I have one more thing I want to point out here. And again, this is really devastating to people who are in crypto because it might be their first time actually going through a true cycle. If it is, that's really devastating. If you've been through crypto winter before, this is not fun, but at least you kind of know what you're expecting here. So total crypto market falls below 1 trillion. And this was over 3 trillion just at the beginning of the year. So there's been the equivalent of, 2, 3 Teslas deleted since the beginning of the year. And we kind of understand the reasons why now. So I want to focus a little bit more on, here is the tweet. I want to focus a little bit more on Bitcoin, but we also have to think about whether or not this is actually giving us any notable insight for the broader market because the VIX gauge is one thing, but crypto has been really acting as a really accurate predictor for me, meaning that whatever it kind of does is really a risk sentiment. And it did lead to that gap down pump up. The gap down we were looking for going into today. And we're now going to look at a few more things. So again, looking at the weekly chart, we're already down by 12% on the week. It's only been a day. And this is not looking all that great. What I would note for the bulls would be we have the 200 weekly moving average here, which is going to be our black line at 22,368. And then the second area we also have for support is going to be our 50 monthly moving average. So this 50 monthly moving average and the 200 weekly moving average are very high time frames. If we cannot hold 20K, I honestly don't know where we're going to stop. And this is a really bad omen. I'm noting here that we have the previous all-time high at about 19,666. The question is the devil going to come back and hurt us once again? So on the month, now we're down by an additional quarter, right? 26.5%. That's a lot. And like I said, I would be expecting to find some support between 21.4 and about 22,400. So that's about a 1,000 point range. And in terms of the daily price action, like we're seeing huge volume really coming in, and we're not really seeing that lower wick which sucked it back up or the capitulation volume like we saw before. So what this is starting to like really look like to me is that we have to really be mindful of what could be coming next. And I was actually getting a little bit optimistic on Ethereum into the weekend, maybe a little bit early. And I'll show you the reason why, because here we have 10 red weeks in a row for Ethereum. And I was noticing that, again, at about 15,500 on the weekend, this looked a lot like the area where we could be potentially bouncing to complete the psychology chart. It did not really happen. So the fact that we're not is pretty concerning. I want to show you one more thing here. So we looked at the BTC chart. Now we understand that there's no real dip buying. So the sell-off kind of seems real because if we're going to get a reversal, it should be happening during the actual session when we get a lot of volume. So we're likely going to be below 25K and start hovering. When we now look at Ethereum, again, looking here at Ethereum, this was the level that I just pointed out, right? 15,000. We lost that. So where's our next support? Well, We're also on we actually pierced the 200 weekly moving average here at about 1,196. We're about 1,200. And then as we look to our monthly chart, we also almost hit the low of our, we almost hit the 50 monthly moving average here at about 1150. Our low so far is 1163. And the last thing I want to point out here is just that we are now, if we zoom out to a really high time frame chart to try to understand what's happening here, oh God, where are we? Well, we're below the 2018 high. This is before we had the lockdown or anything. So right now, Ethereum is less bullish than it was before everything that happened. This was supposed to be the ultimate inflation hedge. So what I want to do now is I want to take a moment to actually offer some help. But I'm doing that because you guys are always there to watch the videos I put out every day, to drop a comment, to smash a thumbs up. I would really appreciate if you could do that again. However, what I want to do now is actually offer some help. So if you are having a tough day and don't have anyone to talk to, please reply inside this thread and I'll try to help as many people as I can. Hang in there. So what I'm trying to say is that if you are showing up today and trying to make sense of what's happening in the market, I want to try to help you if I can. I've personally been chopped up and hurt so many times in the stock market that I want to try to help if you are looking for help. I'm not offering to people who aren't interested. I really want to help if you can. I also posted the same thing on my Twitter account, so if you follow me, again, it's just my personal name, Justin Caron at Twitter. So if you're interested, you can follow me there. If not, post on the YouTube community thread, and I would love to help you. All right, so now we want to try to understand exactly what's happening here to SPY. Oh my God, right? Well, we've already lost the low. We actually rejected here. So there's actually a lot we can learn from SPY today because I think that it's flashing us some mega warnings. So first thing I just want to point out is going to be that what actually happened today. Because as we look here at SPY, this is very unusual. It's very unusual for us to leave, first of all, a multi-point gap. This is a gap of nearly 5 points or 1%. Now we have another gap here. Another, right, this is 10 points, nearly 2%. These are massive holes. They're going to have to get filled. When? I don't know. We could go all the way down to like 330, ultimately come back up and fill them then. We can reverse right back up and fill them here. I don't know. But there are a few things that I am particularly paying attention to as we go forward here. So I'm not going to go through and provide all the notes, but part of the reason why we gapped down fresh this morning was because that there's now 175 basis point of Fed hike seen by September with at least 175 basis point move. So that means 50, 50, 75, which gets us 175 total. This is more than what the market had predicted as well. So that's part of the reason why we're moving lower. We can clearly see that here by looking at the 2-year and 10-year Treasury note and just noticing that, oh my goodness, right? The 10-year Treasury note hit a high at 3.44 and settled here at 3.37 today. It's up by 7%. The 2-year Treasury note almost inverting. It did briefly invert the 10-year again this morning, but is now inverted. We can note here that the 2-year Treasury yield is at 3.34%, up by 9. So this is huge. And it's so important because we have that Fed meeting coming up on Friday. And part of the commentary we provided on the weekend was that, again, they're thinking we're going to put in a higher high. I don't know if that's going to happen. Ever since the 1980s, and we're seeing inflation going back to 1981. High, lower high, lower high, lower high, lower high, lower high, lower high at 2.4, 2.5. And they think suddenly we're going to put in a higher high. Like suddenly people can afford the debt they have. I don't really think they can. So I think that it's going to be very interesting the way we hear from Jerome on Wednesday, because he's also going to have to provide a summary of economic projections. So I think that's also very, very, very interesting. I would also note here that we're right at the end, right at the edge of our falling wedge. We go any lower and it's pretty much lights out. So why did we actually close at 375.01 today? Mr. Justin is going to tell us. We're going to look at the options chain, then we're going to find where the maximum burn was. Yes, so I noticed two things today. I noticed a 380 and 370, actually 378 call spreads. This is for today, June 13th. And let me turn it to pink because I think it stands out a little bit more on the chart. Let's make a big fat line. There we go. So we're looking at June 13th. We're looking at the 16s, which means 8 strikes above and below. What's notable to me, though, is this. So we already know that we had that 390 break even from the weekend for the SPX straddles. But on the put side, what do we have here? We get the 380. So we got 380 down to 375. And that's where the big one is, 340,000 puts. So this looks like a put spread from 380 down to 375. So where would they want that put spread to close out? Basically as close to 375 as possible without going lower. So 380s got paid, 379 got paid, 378 got paid, 377, 376, 375. And the reason why that's notable is because they literally waited until the last possible second to rallied up. I'm talking here about the last 10 minutes, or when we normally start to see that big explosive move going into the close. So for the last 2 bars, what do we get? We actually open up, push down, form a new low of the day at 373.3, and then rally up to close at 375. So that is the reason why I believe we closed there. I'm going to start closing a couple tabs here to make sure I can keep myself on track. There we go. Also just want to note that when we look here at what happened today, this is from our platform. It's 15 minutes delayed, but as of right now, 81% of the put flow, or 741,000 options, which are above 100,000 in premium, are all bearish. It's nearly a 4 to 5 to 1 put call ratio. As we look to smaller options as well, number gets a little bit smaller, but this is where the small guys play, right? Orders below 100,000. So very notable that the big guys who can afford to put on $100,000 plus trades, for every 1 option that is bought every call bought, there's 4 plus that are bearish. We can also note that here by going down and, man, what happened to my list here? Great. TradingView messed all my stuff up. That's all right. The put call ratio for the broader market here, again, CPC is going to be for the broader market, 1.12. So they're going to put us here to a 1-day chart. Right. Whoa. Right. 1.21, and then S&P put call ratio was 1.61. So this is interesting because it's actually lower than it was on Friday. So could we potentially be seeing some maxing out? I don't know. I think that it's a little early to be calling where we're going to be going. However, as I look forward to the Friday chain, which is going to be the most important one to me now, here is what I'm noticing. So as we go to here, again, now let's try to find out again. We already know that anything below 390, there's that $1.7 trillion, which is going to be in the money for those SPX straddles. That's a huge amount of money. Now, as we look here, we can note that we got 380 for Friday, right? Okay, 375. We got 370. Hello. Whoa. What's the premium attached to? It's $5, which means that for these to get their money back, they got really juiced up today too, right? They added $4.33 in premium, or $4. So this means we have to be below 365 for them to get their money back. Are there any open interest calls? No. Is there any volume for the calls? At 380, that's about it. So who seems more motivated? It still seems like the bears are significantly more motivated. So I have a couple more things I want to go through here. And then I think we're going to wrap up by just trying to look at a couple of charts and trying to make this video roughly 20 minutes. All right, so what I want to point out here is now going to be the technical price action. So now we understand the motivation. We understand crypto was going into winter. Looks pretty bleak. It could definitely snap back, but there's a lot of work to do here. So before we're going to get inside this gap, and again, we look here now at the daily chart, we note that there's those 2 massive holes that I talked about. I want to point out one more thing, actually. If you look on the futures chart, there is a gap on the chart, a multi-point gap. This is extremely unusual. There's also a gap left here on the DAX futures. So, right, this for me is extremely unusual because these markets are usually very liquid and they don't leave holes in the chart. They will sell off, rally up, and then gap down fresh inside the range from the previous day. As I look at this too, it also looks like 3 red soldiers, not 3 white soldiers, right? 3 black soldiers. Why? Open within the previous range of the next day, slam it, slam it, slam it. So again, going back to SPY now, what I want to point out is just, come on, if the chart would load, we're looking at our 2022 low was 380.54. Now, there was actually a huge warning sign that today we were going to sell off. So what was the warning sign? Well, we went through this on the Friday close. The open. Look at the open. So the open here, what do we have? We open at 379.85, or about $1 below the area we'd have to claim, about 70 cents. We push up once, stall out and close the candle right here. Right? Then we push up twice and come back down and actually close red, form an inside bar though. So what this tells me is that the next bar that breaks is going to be the decisive move. And then what happened? It went down, and then it went down. So again, that's pretty much what happened on the other big sessions that we had, right? Look at Friday. Sell the open. Nice. There's some thunder and lightning out here. Yeah, look at those bears go, right? They're everywhere. Sell it off on at the open, rally it up all day, and then slam it down. Here we note that we tried to get back above, built up pressure, and then just sold it off anyway. But the close is actually doji. So this tells me that this is either the option sellers not wanting to avoid payout, they're already at their max pain, or the people are actually starting to nibble long here. So if all this stuff is now broken bullish, are there any other warning signs for SPY here? Yes, there are. What's the next warning sign? Well, BTC fell below its 2018 high, and now SPY is below its 2020 high at 378.45. We tried to bounce off it a couple times today. We're unsuccessful. So this is so important to me because as we look at our low now, 373.3. Is that level important? Oh no! What was the close in 2020? 373.88. So we tested the high of 2020, we tested the close, and now we're battling just to claim the open. From where? From 2021, last year, 375.31. So these areas right here between 373 and 379 are extremely important. Why? Because SPY is the last domino to fall. QQQ already did it. It already came back up. It already lost the lows, already dead cat bounce, and then flushed again. That's a lower high and a lower low. Looks disgusting. So for me, this is very, very, very telling because if QQQ leads tech and QQQ came back up, dead cat bounce, hit 300, then also puked, that kind of tells me that maybe S&P is going to do the same thing. All right, so now we understand all of that. It's also really notable that there's been zero relief for anyone. Since when? Since Thursday at 2 o'clock. So they're kind of making it really difficult for people to get out. We're going into a quantitative tightening period where there's already less liquidity, and now they're not letting anybody out. So what's going to happen by OPEX on Friday? Well, anything below 390 means that they're going to be paying out hundreds of billions, if not maybe even more. So what I'm looking at here is if we start to stabilize or if we start to have smaller ranges on the day, start to flatten out into Wednesday, I'm actually getting pretty bullish. I'm looking for that big relief because I think that ultimately, if we start to go for a gap fill of this one here, I think we're ultimately going to fill this one and then go up and fill this one too. It could actually all happen in a couple days as well. When we look back to the way that S&P bottomed before, we can note that it's right here, right? So it happened all in one day, massive gap down, massive pump up, and in 2 days we rallied by 6.5%, 666 actually. There's the devil again. Look back over to here now, from where we are right now to fill the second gap, 7%. Interesting, huh? It's definitely interesting. And we were talking about the trap going into the weekend, so is that it? Is the trap set? Or did the Bulls lose? Or is there hope left here? I don't know. I really don't. What we noted before, too, is that we were looking for, again, you can watch the weekend deep dive, which will come in a moment here, but I was looking for something similar to this right here. We're looking for something similar. Oh, lightning and thunder again. Yes, I love it. I haven't seen this stuff since I've been in the prairies in a long time. So here's our biggest red week going all the way back to January. So again, that's what we're looking at right now. We have our biggest red week going back to January. We flush it all the way down. Then we gap down, form a massive lower tail, and then pump up. So how could that happen? Well, if Jerome only comes out and does 50 basis points, that could be some relief, meaning that, oh my God, we only did 50. His commentary is going to be very important. But then I also noticed this headline came out this morning. Italian PM Draghi, German Chancellor Scholz, and French President Macron are planning a joint visit to Kiev on June 16, which is Wednesday, or the FOMC day. There is an assumption that the purpose of this visit of high-ranking European politicians is to reason with Kiev to accept the conditions of Russia and stop the war. So this could be a massive surprise and could maybe trap these bears. We start to really smoke them. So that's all I have to go through for today. I was going to jump through a couple more charts. I went through all of those on the weekend deep dive, though. So if you have anything you want to, again, if you have anything you would like to continue to watch, there's going to be a video that queues up in a moment here. Otherwise, drop me a comment and let me know what you think. And finally, if you need help, need someone to talk to, go to the community tab, reply in that thread, and I will make every effort possible to answer as many as I can. Thank you for watching, and I look forward to seeing you tomorrow.